Hello all, welcome to the Friday webinar, Alternative Universe episode 4, season 1. So today the topic is trends in advisory and alternative space, which is the most current topic which is running. So for that we have Ms. Lakshmi Iyer. To talk about her, Lakshmi Iyer is the CEO of investment advisory business Kotak Investment Advisors Ltd. She has been in Kotak Group for over 22 years. As a part of Kotak Investment Advisors, she is responsible for investment advisory and product solutions spanning across fixed income, equities, real estate, and alternates. In a previous role at Kotak Mahindra AMC, she served as head of products and as CIO of fixed income. Prior to joining Kotak, Lakshmi worked with Finance Analytics Private Limited as a research analyst. She holds an MBA in finance from Narse Monge Institute of Management Studies. She has been recognized as one of the top 25 most influential women in asset management in Asia by an Asian investor. Moving on to Mr. Vikaas M Sachdeva, who needs no introduction. So he's an industry stalwart with over 3 decades of experience in asset management business. He's currently managing director of Sundaram Alternate Assets. Hello, sir.
Hello.
So next, moving on to Mr. Madanagopal Ramu, who's not a new face to us, is the head of equities fund manager with over 15 years of experience in the Indian financial markets. He's currently manages the assets under management of around 3,400 crores across PMS and AF platforms at Sundaram Alternates. So, hello, sir. Before giving the podium to Mr. Vikaas, so let me request the audience to put their questions on the Q&A box and not on the chat box, and not to ask any specific questions. Thank you, sir. Over to you.
Thank you, Akshara. Welcome, Lakshmi. I must tell you that ever since we started talking on social media about the fact that you will be on the show, a lot of ladies in my organization have got very excited. They've all wanted. I think most of them are already logged in to hear you, and we've seen an unprecedented response in terms of registration. So thank you so much for being on the show.
Thank you so much.
As is the want, I think it's my privilege to actually introduce you as a person behind the professional. This is typically a tradition which we follow here. And I've done a lot of research, a lot of detective work. I'm going to give you some insights about you. To start with, I think your colleagues just adore you. They describe you as bubbly, spontaneous, witty, lively, sharp sense of humor with quick repartees. In fact, I was trying to push and prod to see what gets your goat, but these were most of the adjectives which came my way. You're a consummate professional, very hardworking and always prepared for meetings. Doesn't matter which part of the world you are the previous night, the next day morning, you're early to work, punctual for meetings, and a stickler for timelines. These are some of the virtues they've talked about. You're an actionist rather than being a perfectionist. Deadlines not being met irk you. Personally, I think most of us know that you're an absolute Bollywood buff and pretty much up to date with the latest. In fact, I can tell you from my personal experience, we've been on panel discussions together. You can actually quote examples from movies pretty much as muscle memory. You love traveling, you enjoy exploring nature. You're a pure vegetarian and a complete foodie, trying out new cuisines with an innate weakness for chocolates and cheese.
Oh, wow. Amazing.
In your family, you have a son, Abhinav, who's 18 years old and is an avid chess player from what I believe. Your husband, Jankiram, works at a reputed financial services firm. You have a golden retriever, Coco, whom the entire family dotes on. Currently, you're into golf. You love dressing in Western attire, and you're fluent in 5 languages: Hindi, English, Tamil, Malayalam, and Gujarati. I've heard you speak Gujarati personally. I think it's fab. You're a typical Saji person, and being the typical Saji busy bee that you are, even after work, you're pretty actively involved in society affairs. Okay. So despite all of this, you're one of the 25 top women in India in terms of financial services. So heartiest congratulations to you for this achievement.
Thank you, Vikaas. But I must say, I don't think even my husband would have done so much on research before he decided to propose to me. So I think that is some incredible amount of knowledge and information that I should call it. I don't know what your team has stalked me from somewhere. I have no clue, but this is so much of detail. I'm amazed. Thank you so much.
So just for the compliance guys in my team, we didn't stalk her. Huh? We on social media, okay? So let's just step into the questions. Let's deep dive into the questions right away. It's been 6 months or that you've stepped into an investment advisory role, but you've had a huge amount of experience in mutual funds. How has your mutual fund experience, that extensive experience in mutual funds, how is it helping you navigate this new responsibility?
Yeah, so firstly, I must say that it's been a little over 5 months, but it feels like I've spent 5 years into this role. It seems like, so everyone who meets me still asks me, how's your new role? I said, which new role? I think it feels like I've been this forever because I've tried to crunch almost, a long stint of work into the last 5.5 months. How has it been, I would say, in terms of... See, mutual fund, which has been my bedrock in terms of whatever I have learned and whatever I've given back to the society or the investor fraternity, is all about fiduciary responsibility. It's all about managing the trust. And as I, swap roles and wear the KIAL hat, I also believe it's the same extension of that fiduciary responsibility. So there are stakeholders, whether it's the shareholder, whether it's the unit holder, the shareholders and the unit holders have one thing which is very, very common, that they want that you be the absolute custodian of their trust. And I think that is the learning from the mutual fund industry, that how do you learn to uphold these values? How do you build on it? And how do you try to create, even when I was in the AMC, I used to say that mutual fund as a vehicle of participation is like an X-ray. तो आपको पता होता है कि any part of your body का अगर आप X-ray निकालो, you exactly know what ails you in that part of the body, and that's exactly the reason why you do the X-ray. So everything is so transparent. So I think that's where the next level we need to progress to try to get to ensure, and of course here also it's the same thing. But how do you bring about those best practices? How do you try to make relationships deeper? I think that is the thread. So in some sense, in movie parlance, if for me asset management or the mutual fund was the sui, then investment advisory is the dhaga. The sui and dhaga have to coexist to ensure that we move on in the relay race to the next baton forward.
Very interesting analogy. So now that you're into investment advisory and you must be dealing with a lot of asset allocation conundrums at this point of time. Where do alternate investments like portfolio management services and AIFs fit into your client's portfolio by and large?
See, there is, there is this ad which used to go with a tagline, "Har ek friend zaruri hota hai." So, likewise, I would say, "Har ek strategy zaruri hota hai." What is very important to understand ki aapki Lakshman Rekha kya hai? And when I say Lakshman Rekha, I am talking about the contours of your return expectation and the contours of the risk profiling that you come under. So these two things are a non-negotiable, and I keep telling this to my colleagues. Jab Lakshman Rekha paar hui, tab Ramayan rachi thi. So you have to be very, very sure that that Lakshman Rekha is not breached, but creating that Lakshman Rekha becomes exceedingly important. And if somebody tells you that, dude, I'm very, very, risk averse, don't even try to give me, 1 inch of diluted risk or 1 centimeter of diluted risk, then there is no point of stylishly populating his or her strategy. So then it is the plain Jane kind of strategy, which is perfectly doable. But yes, here is a set of investors who come and tell me or tell us that, yeah, I know you're a South Indian, fine, you like curd rice, but we just don't like curd rice plain and simple. Why don't you, spike it with some pomegranate? Why don't you grate some carrot? And apart from the normal tadka that you give, and lo and behold, the curd rice doesn't change its shape. It just allows you a separate texture. It's a little bit juicy, it's a little bit slimy, and that's how, it suits your palate. So for them, I think there is, that clear segue towards offering him or her something plus. Also, we need to keep in mind is that you are as good. I mean, if you are a great eater and if you appreciate new palate, the chef's creativity enzymes obviously start, giving you that much more to suit your palate. And that's where I bring in the concept of innovation. So if you are able to innovate and curate some of these strategies, which probably may not be available in the traditional mode of investments. You mentioned private credit for as a case in point. I may not be able to do that, very seamlessly through a mutual fund route. That's where the alternates, which is the PMS or the AIF, sets in. So there is one khacha, I would say, for every set of investors. The key thing, as I said, is the non-negotiable part is clearly that Lakshman Rekha. So start drawing the Lakshman Rekha first, and because there are so many Ravans around you who are honestly and every time truthfully trying to get you out of the Lakshman Rekha, and these sound and look so genuine. So it's very important that that should be a non-negotiable.
That's very interesting. You've explained it in a very simple manner. And I think in the first 10 minutes itself, one gets to know how deeply involved you are as a foodie as well as a Bollywood person. So I think my research was right. Madan, over to you.
Yeah, thanks, Vikaas, and welcome, Lakshmi. Always wonderful to talk to you. Your energy keeps us also energized.
Absolutely.
So, see, having a fund management background and having heard you in some of the meetings, it's been a very tough period, right, for the advisors as well as for the fund management space, given that COVID happened and then you had a war and the high interest rates, inflation. It's going through a lot of changes. So it is also very helpful to understand what is your thought process on the macros, how you handled in the last, say, 4 or 5 years from an advisory perspective. That will be very interesting for us to also take an idea of it.
Madan, the macros right now are in some sense like a tale of two cities. So, on the one hand, you have US, which is, in some true sense, behaving like Jana tha Japan, lekin pahunch gaye China. So they are, walking the talk with great reluctance. So forever they kept saying they're going to shrink the balance sheet. And what they're doing right now is what they said probably a year back. And in some sense, they've been trying to do a Gumrah. Gumrah is the latest movie. I don't know how many of the viewers would have seen, but it has Aditya Roy Kapoor in double role. When you thought this guy is a murderer, then suddenly you see that jail mein ek aur Aditya Roy Kapoor and you get totally confused. So in some sense, that Gumrah factor is playing out in our markets also, looking at the global macro. If I look at closer home, if I look at the Indian macro landscape, the situation is not all that bad. I know there is a fool or kante kind of a situation, but there is more fool and there is less kante. So I think that is what we need to imbibe. And when I say that, what I mean is that India is one of the very few countries, I'd rather say the only country which has a high positive real rates. Inflation is coming down, interest rates are still high. So the net impact to the investor is positive. Whereas you can't say that of US, you can't say that of Europe, which are the two relevant or the big economies. So I would say from that perspective is where we need to plan out and, go on. We clearly believe that after, going through, Meru Parvat Chadai, jaise hum bolte, or, whatever Everest, if you like, whichever, if you like Mount Everest, after going through that peak in terms of interest rates, we are right now somewhere at a Patni top kind of a situation where interest rates are plateauing out. Now, after plateauing out, you can stay there for an extended period of time, which is where we believe incrementally most economies are coming in, and then you will see a period of easing when you see it, coming down the plateau. I think that is exactly that twilight zone, we are in at the current juncture. And I think that augurs well, I think both for risk asset classes and also for fixed income as an asset class. So you get lock into the higher interest rates as an investor and wait for rare-ended capital gains. So for now, it looks like, as I said, even on the investment side, looks like a tale of two cities, probably relying more on carry initially if it's a fixed income investment, and then potential for capital gains. And obviously more from an equity standpoint, a potential for staggered investment with an intent to, get gratification over the next 3 to 5 years.
Great to hear that. One related point, and I touched upon it in the first question itself. Given, and I always think the role of the investment advisor has become challenging, given that these macros are changing so quickly for year after year. And in the same period, alternates have grown in a meaningful how do you think the investment advisory role has helped the alternate space to grow, as well as what are the challenges you are facing with so many new products are coming through? It's not just only anymore PMS and mutual fund PMS and Cat 3. Cat 2 is there, real estate is there. And also you are getting, I think your investors would have asked you about opinions on Bitcoins also, I think, because we also get those questions directly, although we are only stuck to equity. So how do you really balance that role?
I think this question is always a very relevant question at multiple points in time, and in today's time it also garners a lot more significance, given the fact that I said you want to go north, you actually go southeast or southwest. I was there about 2 weeks back. I'd gone to see this civilization to nation performance at NMACC, Nita Mukesh Ambani Cultural Center. I don't have any, stake in that, but I must tell you that that is a state-of-the-art event that you must watch. But I'm not propagating the event there, but I want to bring to the audience or the viewers' attention to one particular, small skit which they showed the entire Mahabharat role, where you had Krishna on the chariot and then Arjun, who is absolutely refusing to go and brave the Kauravas, and he's totally confused. Why I gave you this analogy is to tell you that today in this battlefield of the financial markets, where central bankers are batting inflation, investors as savers are batting inflation, with all of this battlefield going on, it's this constant tug of war. I think somebody who sits out objectively and tries to keep, harnessing into your conscience, or constantly tell you, you call it Parth, you call it Sarathi, you call it Krishna Bhagavan, you call it by whatever name, it doesn't matter. I think that is where the role of the advisor is getting even more potent, and more so in this kind of a market. I must hasten to add, and then this is my over 2 decades of money management experience, I have seldom met anybody who does not think that he or she is a fund manager. तो सबको ऐसे ही लगता है कि my portfolio is the best, मेरा portfolio महान, जैसे बोलते मेरा भारत महान. But even then, how do you bite that bullet or that bitter pill and go and show him or her the mirror and say that anybody and everybody who comes to you will always put his or her best foot forward, including the ones that you see on whether social media, whether you see on frontline media, it doesn't matter. I think that showing the mirror is something which I believe the advisory role has to keep doing constantly. And the other most important thing is, to constantly be up the curve. How do you be information access everybody has. But how do you process that information into something more knowledgeable to the end investor? नहीं तो ज्ञान तो सबको मिलता है. It's like saying that I'm coming to India. Now, India is such a big place. अब India में कहाँ? Then they'll say Maharashtra. Maharashtra में कहाँ? So you have to chisel it down. I think that is where you will get that conviction and confidence, and that becomes much more relevant, given the fact that there is so much of clutter of information. Itna sara information hai, 42 AMC, 30-40 PMSs, 50-70 AIFs. You have to assimilate all that information and make it available on one platter. Imagine I ask you, Madan, to make a Mexican burrito bowl, and I give you some 15 items. Is it so simple that you just mix everything and lo and behold, you have the burrito? Then every 100 meters, we would actually see a Mexican restaurant. The answer is you see probably an Udupi restaurant everywhere, but you don't see Mexican. मुझे भी खोजना पड़ता है. As a foodie, I have to hunt for a specialized Mexican to go and savor the dish. So you can't eat Mexican every day, but you don't find them every day. So I think we need to keep that in mind.
I have to search what is first Mexican burrito. So thank you so much. Really wonderful to hear your views. Over to Vikaas. I have one question on global bond index, which I think you will be a right person.
Why don't you ask that?
Okay. No, I think that's an interesting thing that is happening, right? The JP Morgan wanted to include, and then now they have put us on watch list or something, and they are highlighting many issues because this can change how the flows can happen in India. It can help a lot on the rupee front. A lot of our investors also keep asking us on this rupee issues. This can be a very good helping hand for India to handle the current macro risk also. from a rupee perspective, but still we chose the path to not go in aggressive. There is a taxation issue, there is an infrastructure issue that they keep highlighting. What do you think really is happening? Are we heading towards that direction, or you think it is still very, very uncertain?
So right now, if I were to say it is a great thing to have, no doubt about it. It will act as an accentuated or as a catalyst to expedite some of the flows, which probably could be rear-ended. But at the current juncture, I don't know, Madan, have you seen this movie Stree? No, I don't know. Stree is a movie of this ghost, this lady ghost, where wall pe likha hota hai, "Oh Stree kal aana." So this is something what we are also doing right now as a nation with respect to global indices inclusion. Ki oh index inclusion kal aana. To wo kal kab aayega mujhe pata nahi, and kal ho na ho. But the point is, yahan pe kal hai, but wo kal nahi hoga. That is the only small differential, because there are multiple paths to this inclusion. And as you rightly alluded to, all those tick the boxes have to happen. Until that tick the box doesn't happen, which to my mind is still some time away. So if you ask me, do I have conviction that it will happen? The answer is yes. Do I have conviction it will happen in this financial year? I would still say it's toss of a coin, or more than probably less than toss of a coin, where the probability is even. Should we have it? Well, I would say if I look at how South Korea has benefited, how China has benefited, if I see some of these countries progress after index inclusion as far as the bond, the sovereign bonds are concerned, it's clearly a different picture. I mean, it's really the narrative which has changed after that. So it is a necessary evil. I would say it's a hygiene which is required, but looks like it will have to wait, and which is why my writing on the wall, "Oh Sri Kalana."
Correct. But I think definitely it's a good thing that can happen to capital for a country which always starved of capital. But I think there are too many contradicting requirements we can see. So I think.
But Madan, but since you brought this point, but I would just want to add one small point that, if I were thinking as a policy maker, I'm not, I know, but inshallah, kabhi kis din ho bhi jayenge. But my thought process will be, first get durable money through FDI, then get money through FPI in equities, and then get FPI in fixed income. That could be a very a logical thread to follow, given that investors, the global investors, when they come typically in equities, they don't hedge for the currency risk. But when they come in fixed income, the mentality is always about what is that return I'm earning over and above sovereign in US dollar, US treasury, and therefore that tendency to convert is very high. So that could be another reason. We don't know.
Great to hear your views on this. Yeah, over to you, Vikaas.
I'm almost hearing Madan's brain click and say, now I have to Google what is Stree also. Stree the movie. So coming back to investment advisory, I think you mentioned something about democratization of knowledge. A lot of knowledge is available everywhere. I think one of the questions one usually struggles with is to understand how is the trend of personalized investment advice shaping up in an era of cutting-edge technology, artificial intelligence. How does one make sure that this personalized investment advice actually goes through, people understand, assimilate, when there's so much of noise around? What are your thoughts on that?
So, Vikaas, when you were introducing me, you said, she goes well prepared and all that, which is true for me, 99.99% of the times. But 2 weeks back, there was this period which happened to be in that 0.001%, where it was so back to back that I had to do a fireside chat. And I had to, have a prelogue, I had a preface, and then I had to have questions, and scripting to kuch hota nahi hai, so I had to do all of that. So I said, chalo theek hai, AI hai, to hum chat GPT ka istemal karenge. So I wrote to chat GPT, give me, and I mentioned the person's name, and I said, give me a description of her in Bollywood style, because that's my style. And it spoke about running behind the trees. It spoke about Nile Gagan ke tale. Oh, I got so scandalized. I actually shut it down. And then I said, for whatever half an hour I have, let me just keep everything aside and start writing what I have in mind. Why I gave you this analogy, and I truly did it just to see that is there that a style which I can, try to get with whatever precision, even if it's 9 on 10 accurate, mujhe theek hai. I don't want to be, I'm not a perfectionist. So I don't mind doing that. But then you realize that till the time that personal intervention doesn't come, you can't really make that so-called edge or that difference. And I think that is where I would say that technology, artificial intelligence, all of this are excellent complementing. They are your best buddies. You cannot say that I don't know this. You have to, or you ought to know all of this. But that final touch, that personalized touch is something, I met somebody about 7-8 years back whose card said futurist. That was his profession. At least that's what his card mentioned. And the one thing which stuck with me even today, he told me the one thing, whatever said and done, whether it's democratized or technology driven or whatever, the one thing that you cannot substitute is a profession where you need to greet somebody or meet somebody with a smile. And that left a very lasting impression, because ultimately what really matters to you, especially in this entire growth journey of wealth creation, wealth preservation, is that innate trust. Why do you think we're almost all of us are back to office, despite the fact that 2.5 years of COVID taught us that we can work in Manhattan or in Maldives or in Mauritius? You don't need to be in Mumbai, for example. So I think I would say you need to have a mix and blend. You can't be completely oblivious ki mere alawa kuch chal nahi sakta. I think that paranoia in you has to be there. Ki tomorrow if I wake up, will somebody else or will the robo or will the AI have taken my job? That paranoia of your survival or your existence will have to keep making you invent and reinvent yourself. So that's very, very important. That's the way I see technology. So it's an enabler. It's not a threat.
It's very interesting. So if I can paraphrase this, if you're an investor listening into this discussion and your leaning is more towards using information available, an element of personalized investment advice can actually make a big difference for you. And if you're an advisor out there, just personalized investment advice might not be the thing. You have to be completely updated in terms of technology, in terms of information, in terms of whatever is happening out there. Have I summarized that correctly, Lakshmi?
Absolutely, absolutely. So if you see the movie Robo, Vikas, have you seen the Rajnikant movie Robo?
I've seen all the movies you've talked about, so I'm very happy. I'm
so,
up to date.
So Aishwarya Rai actually fell in love with Chitti. Chitti was
yes.
the robo make of Rajnikant. So she was actually dating the guy Rajnikant, and actually she fell in love with the robo. So you have to coexist, right? So that's what I was trying to say.
So from dating to being dated, I think recently indexation got removed on debt funds, right? So there's a fair amount of froth which is happening in the market, and as is what happens, opinions can border on the extreme from one end to the other. But as a professional investment advisor firm, you have seen this development, and I think people like you and me have been very emotionally involved in terms of indexation and developing the whole industry. But when we sit on the other side of the fence, and if you have to advise your clients to come and ask you what are the other avenues I should be looking at, what is your firm recommending at this point of time?
So, I've been a firm believer that, you are born with your set of parents. So you can't change that. And the rules they set need to be followed. So you can't question them. You can do thoda bahut questioning, but you have to adapt, and that is a way of life. And that's exactly what we learned in, the March period when this came in. So I would say it's not that there is no life at the end of the tunnel. I clearly believe that newer strategies. So, now I would say everything is on a level playing, field. You have accessibility of, say, a Roro to go to Alibag or a jet speed boat or a Maldar, or maybe you can just drive down. The time taken may be a little bit different, but 19-20 chhodke, the variation chhodke, they all, lead you to the same destination. And the differential in fares, in this case taxation, is not very drastic, or it's almost at level playing field. So therefore, I would say, why stifle your creativity? Earlier, you said that, oh, this is pran jaye par mutual fund na jaye, that kind of a mindset. But yahan pe pran bhi rakho, mutual fund bhi rakho, and bring other pranis also into the picture. I think that is where I would say, let's take the example of credit. And I've been, quoting this on various platforms. there is a space where banks have vacated a space because they can't do quite a bit of capital market lending, acquisition financing, loan against shares. There's a space where mutual funds can never be mutual funds can reach, say, agar tum Jaini ho in diet parlance, you can at the best, probably struggle even with mock meat, because mock meat bhi tumko chicken ki tarah dikhta hai. But for a proper protein seeking individual, you also have the option of, extending the platter beyond mock meat to actual meat. So I think that is where I would bring in the role of AIFs, where, they play a very instrumental role in channelizing that money, say through, for example, the private credit space. If you ask me, we're very, very bullish on the private credit space. And in the performing, I don't need to go into stress cases saying that, death do us apart kind of category. I don't need to go over there. There is a lovely category beyond the 7 to 8% sovereigns, quasi-sovereigns, to the up to the 13, 14, 15%, gross yielding kind of space, and EBITDA generating profitable companies. So I think that is a sweet spot, if you ask me, that I'm very bullish on. Time will tell, of course, but I think in the next, I would say 4 to 6 quarters, I clearly see this category catapulting to a next level.
Amazing. Amazing. Madan, you have some more questions to ask. Over to you.
Thanks, Vikas. So, so again, with a similar topic and people, active fund management and passive fund management, because last year we saw the kind of inflow into passives, and ETFs have also become very interesting areas for people to invest into. What is your take on this, and we always keep justifying active in fund management given the role that we are, and we also believe in it. But how you see this entire argument shaping up as an advisor?
My view has always been, and this is agnostic of the role or the hat that I wear, I always believe that there is a space and a scope for active and passive to coexist. I do not think that passive is going to completely rout and carnage active, because India is a land of growth. And when we are talking about a growth opportunity, can I expect, a 10 lakh crore market cap company to become 20 lakh in 5 years? May not be. Maybe with a 1 on 10, 2 on 10 certainty, I can say that, because the size and scale is very different. But can I expect a 10,000 crore company market cap to become 20, 30, 40,000 crores in the next 5, 7 years? Can it become a 1 lakh crore market cap company in the next 10 years, do a 10x growth? Answer is, it's not impossible. There, the probability will be 7 on 10. Or even 8 on 10. So when you're identifying that kind of, when you categorize clearly, the incremental value add that Indian money managers bring to the table is still significantly high in the mid and small cap space. That doesn't mean to say that in the large cap, they cannot add value. And therefore, what you see as a de-risking mechanism, you actually start looking at some complementing strategies in the large cap space and continue to coexist with active funds in the flexi cap or in the mid and small cap space. So I am, in the AMC back in 2007, 2008, passive is only a spelling which people knew. That is the time when we actually launched passive funds in the country with great conviction that this will, like literally, if you've seen the movie Gully Boy, you'll relate to Apna Time Aayega. So I would say apna time to haram aayega, unka time tabhi nahi tha, but now they will continue. But to say that passives will completely substitute to active, I am not of that camp. So clearly the coexisting mechanism will work. Mil baat ke sab kuch khayenge, growth hoga. And in this case, I can say, ek myan mein do talwar reh sakte hain.
Thanks for your opinion. Over to you, Vikas. I think a lot of questions are flowing in.
A lot of questions are coming in. So I think I'll have a couple of questions, and after that we'll move to audience questions, Lakshmi. Time is just flying by. I think very entertaining session, very informative session. But a very important question now that people are starting to ask, and this is something I just wanted to pick your brain on. Earlier, if you remember, in the good old days, we used to talk about, as you're getting closer to retirement, you shift most of your money into debt, etc., etc., etc. But I think most people are now questioning this particular concept. They're saying that your post-retirement lifespan usually is almost as equal to your working lifespan, 25, 30 years. So if that is indeed the case, how do you think asset allocation strategies should evolve, are evolving, need to evolve?
So that tussle, Vikas, is going to be there forever. And I am unfortunately not of the camp which looks at age and allocates, monies. By that logic, my father, who's 83, would hardly have anything in equities. And I still have 20% of his portfolio even right now in equities, because he doesn't have any active, stream of income. So obviously, bulk of his portfolio is oriented towards fixed income. Which is some sort of annuity, but there is that element of growth capital which is required, as I call it, some small tadka to the portfolio. So I would say that asset allocations will have to be more goal linked. Retirement is one such goal. It is not the only goal. These days, I see people retiring. I see people playing golf at 40. And I feel so ancient when I go to learn at the driving range. मुझे तो लगता है यार, ये तो you get that feel good factor that you might be among the youngest to only realize that कोई और नोट छाप के उधर बैठ के केवल golf खेल रहा है. So I would say the narrative of retirement also that we all learned, which was 60 years or 55 years plus, all that is changing. Today 9 is the new teen. It is not 13. And by 18, which is the official major age, voting छोड़ के आप सब कुछ कर चुके होते हो. So that's why I would say that the agility with which you are planning and asset allocating is going to be exceedingly, exceedingly important. I think that is where I would bring in the role of the thali. Now, whichever thali you like a Gujju thali, you like a Maharashtrian thali, Hyderabad, doesn't matter. But the role of that thali has to bring in everything in the right proportion, and to make sure that when you're having the thali at the night time, they should make sure that it should be lower on carbs, and introduce more carbs in your diet when you're having a thali during the daytime. And daytime is your active working age versus the nighttime is your so-called semi-retirement, stroke retirement. So keep that in mind. It's very, very important. And equally important to note is, I think Madan alluded to the point on crypto. Now, I was doing a presentation in Chandigarh, and somebody asked me, "Ye to aapki thali hai asset allocation mein?" And I gave example of carbs and fats, gulab jamun, rice and all. Usne pucha mujhe papad kya hai? मैंने बोला ये पापड़ आपका क्रिप्टो है, खाने के 48 घंटे बाद भी हजम नहीं होता. तो डाइजेस्टिव एबिलिटी ड्यूरिंग डे टाइम एंड नाइट टाइम इज 72 hours. So keep away from papads unless you so love your papad, have it roasted. So therefore you need to keep in mind that don't get too stylish when you're planning your asset allocation. Let's go to age-old therapies which have worked pretty well, which is largely 90-95% of your returns which you are earning or you're likely to earn is attributed to the right set of asset allocation. So spend more time in doing that, and baki sab, I think, is just more of fizz. So it's like, opening a packet of whatever chips that you like. Itna hawa foola rehta hai, khol ke, if I am a chips freak, for example, which I am, end mein thoda sa chips dikhta hai, and the other full of, is full of gas. So I think don't focus on that gas, focus on the substance. That's very important.
Just a light question, since you mentioned about being dynamic in terms of the asset allocation, what should be the ideal time frame to keep monitoring your asset allocation or reviewing it? Should it be 6 months? Should it be 1 year? Should it be 3 years? According to you.
So, when you are putting a Google Maps and you're driving, say, from Bombay to Goa, I can't keep looking at my Google Maps every 10 minutes ki main kabhi pahunchungi. So correct. Give it intermittent gaps. So for example, if I know Bombay to Goa is a 12-hour journey, I don't mind looking at it after an hour or so, or when I need a bio break, or whether I need a lunch break. Likewise, I'll tell you what has worked well for me, Vikaas, and I think that's worth extrapolating for whatever it's worth. And for me, that's worked wonders. I look at my portfolio meaningfully only once a year when my CA is hounding me to file my tax returns. Then whatever noise, whatever halchal, whatever dil ki dhadkan tez ho jate, mujhe nahi farak padta. I don't see it because the market noises don't have to impact my portfolio. So keep that in mind. Course correction, if it is required on an urgent basis, obviously look at it even earlier. But otherwise, let that money work for you. It is so very important. Commonsensical stuff, but people forget it very, very easily. So the more, 2008, if you looked at the value of your house, you would be under depression. All of us would be under depression, whichever part of the country you were. Property prices corrected 10, 20, 30%. Because you didn't bother to look at your house, yaar, main to is ghar mein reh raha hu, don't have a look at it, you are much more gratified today, 15 years down the line. So why not have that same principle to your own portfolio?
Excellent point. And I think most of us would immediately empathize with what you're saying. At the very, if one has to push a number, it could be probably an annual review. Otherwise, only if you require. Am I right? That's
Absolutely.
what you're saying?
Yeah. Once in a year is more than sufficient to look at your portfolio. As I said, unless koi kisi ne self goal maar liya, to self
So
goal
that's a
mare to
separate
uske
thing. That's the
Absolutely.
0.001% that you're talking about, right?
Absolutely.
So, before we move on to the audience questions, Lakshmi, there is something which we're introducing in this show. It's called the alternate twist questions. Alternate and twist is actually a synonym if you look at it, right? So the question which we've asked our audiences and which has come is, if you had to dedicate or let's say name a movie which reflects the current volatility in the equity markets, which one would it be and why?
So, वैसे तो there may be many movies, but I think volatility, I would say the journey is from Bhool Bhulaiya to Bhool Bhulaiya Part 1 to maybe Bhool Bhulaiya Part 2, because for those who've seen the movie Bhool Bhulaiya, you will really relate to what I'm saying. Every time Anjulika comes in front of you, you believe it is Manjulika, and the more when Manjulika dances, you actually think she is Anjulika. So what is happening is, this is exactly what is happening in the markets right now. Whenever you see Nifty at 17,000, you think it will go to 16,000 and it bounces back and goes to 18. When you start dancing at 18,000 and want to do profit booking, that is when you realize that having that disciplined investment when it was at 17 was more relevant. And I think similar thing is happening across the geographies. It's going to be very difficult because there are Siamese twins playing at every point in time at the macro and the micro level. So the only thing that is in your control is hold on the reins of greed and fear, and then enjoy Bollywood movies. I used to jovially say that this is on a lighter note, okay? I don't own PVR stock, but I used to on a jovial note tell all my colleagues that PVR ka stock through the pandemic mere wajah se atka pada hua tha, because I was waiting. And they were also hoping that people like us will go and watch movies and spend on F&B. That's on a lighter note, by the way.
Wonderful, wonderful. So I've got questions pouring in, and I think while I'm scanning those questions, I see a lot of comments also there. I must tell you, Lakshmi, that what we are going to do is we're going to select the best question at the end of all of this and give that question a special prize. So I'm just going to start asking you some of the questions. I think let me start by a very simple one. Sweetie Hal asked me, being a woman who started her career as a research analyst and who's now a CEO, which movie would you refer to just your journey in an investment industry? Your journey.
Lage raho, Munna bhai.
Perfect.
Very important. Holding
Perfect.
on to your conviction is very, very important.
Perfect. Meet asks you, how do you see de-dollarization playing out?
It is something which people have been talking about, demise of the dollar forever and ever. So I think that it is like the force of the Niagara Falls, right? If you take 10 buckets of water and try to challenge its supremacy, you will find with very limited success. But yes, attempts are being made. I don't think we will see light at the end of the tunnel, because it is a mother of all economies, and therefore the faith in that fiat currency as being the entity. Even gold tried to challenge it, but it met with more of a pale status. So I would say de-dollarization is great to have. Diversification is okay, which is what you're seeing central bankers doing, but replacing it completely, I have my serious doubts.
Interesting. Aksharaj asks you, in your opinion, is the current Indian advisory infrastructure well equipped and on par with global trends? How is the accessibility and availability of new investment products in India according to you?
In fact, Vikaas, I've been meeting so many global asset allocators and global advisors. They're actually taking cue from what we are trying to do. So I would say in many places, we are actually behaving like the Dronacharya and they are behaving like the Shishya. So we are like the Guru cool and they are more like Shishya waiting to drool. So I think that is the way I would put at it. In terms of products, I think globally there is much, much more sophistication, obviously because they're at a much advanced or a different pedestal than where things are today. So I would say there we can take some sort of a cue from and try to obviously get more creative in terms of our offerings. And if there is merit, obviously convince the regulator that this is the need of the hour. But for that, you require a slightly more sophisticated mindset. If you keep looking at NAVs every 1 hour, then Rome cannot be built for sure.
Absolutely. I would agree with you. I think that's where the concept of private capital is starting to come in, at least in the alternates business, long-term capital. There's a lot of questions which are coming in for Kotak. And one question which I thought I should just ask you, does KIAL have a debt-only PMS?
We don't have PMS under the KIL umbrella. We right now have only alternate investment funds, though we do have a PMS license, but we haven't invoked it as yet.
Okay. Sarthak Patel asks you a question. What are some of the key factors that investors should consider when evaluating potential alternate investments such as private equity, revenue-based financing, or lease financing? And how can they mitigate some of the risks associated with these type of investments? It's a pretty profound question.
It's very, very profound, which, honestly, we can't do justice in such a short span of time. But I would tell you only one thing. Vidya Balan, in the movie Dirty Picture said, what sells is entertainment, entertainment, entertainment. So always keep in mind when you are evaluating any investee company, look for cash flow, cash flow, cash flow. अब आप बोलोगे unlisted में तो होगा नहीं, but eventually that is what you need to look out for, because ultimately cash flow is the reality. Everything else, according to me, is vanity. So keep that in mind. And I think, every investee company that we evaluate, including startups, for example, we do have, a private pre-IPO fund where also we are looking out for companies in the unlisted space. But is somebody constantly borrowing to do operating expenses? Then that's completely a red mark for us. So clearly you need to look out for opportunities where there is eventual cash flow visibility, and that eventual cannot be a very, very long rope. So I think cash flow is, according to me, non-negotiable. It's very nice to say I'm burning. वो burning में फिर वो राख ही बचता है, वो कुछ और मीट नहीं बचता है.
Now, this is a question I think a lot of people would be asking you as well. In the last couple of years, investments per se, especially equity, have not been doing too well, right? Yet, people complain that they have to keep on paying fees. Okay. From your point of view, what would be your advice to such people in terms of investing in their strategies? So, in a very simplistic fashion, somebody is saying, "I've not made money, but I'm paying fees. What should I do?"
So this has been a very raging debate, Vikaas, and I also, as I said, I manage money. I, do multiple fiduciary capacity. I also advise, people on money management. And one thing I keep asking everyone कि आपको सर्दी जुकाम हो गया, आप डॉक्टर के पास गए, फीस दिए, आपने दवाई खा ली, 3 दिन के बाद you're still not okay. What do? You go to the doctor and go for a follow-up visit, no? And then you pay that add-on and then say that अब मुझे बताओ क्या करना है. Do you go and tell the doctor मुझे फीस लौटा दो, अरे मेरी सर्दी खांसी ठीक नहीं हुई है? And this is as simple as it might sound. I keep telling that, money managers need time to perform. You can't look at a recency bias, and human beings की ना गजरी memory बहुत ज्यादा है. They have a short-term memory loss. 15 साल का परफॉर्मेंस भूल जाते हैं, 15 हफ्ते का परफॉर्मेंस देखते ही बोलते हैं कि बॉस दिस पर्सन कैन नॉट परफॉर्म, सो गेट मी माय मनी बैक और लेट मी हिट द रिडेम्पशन बटन. इट डजंट वर्क दैट वे. You cannot make money in a linear or a straight line method. I think the more we chisel that into our head, the better it is for all of us. Form is temporary, class is permanent. We have to keep that in mind. And that is not only in the world of cricket or in the world of sports. It is true in the world of investments also. So I believe that clearly, and for everything. So is it therefore that you are expecting 12% and you got 20%, you got that 8% extra? Are you going to give the money manager or the advisor that share? I would say, give me 50% of that. Are you going to give me? Answer is probably yes, probably no. If you are, then chalo, there is a share class for you, which is called a participating share class, where I am giving you, an upside, which I am making when I'm making more money, or you are making more money. So choose your poison. I mean, 6 to you, maybe 9 to me. That doesn't mean you are right and I am always wrong. So I think choose your battles wisely. I believe that there is a space for everything. If you are consistently underperforming, then it requires a DNA change. It is that you cannot look at then and say that, oh, I did a mistake. That's not possible. That is, basic assessment issue. But I think, but for that, which is more of, a smaller and a minority portion, most of them, if you see, with consistency, and I think that is where considerable time is, invested in trying to identifying the right kind of manager. And that's very, very important.
I think it was a very candid answer to a very candid question by Sudhakar Bontala. And I especially like the part about when you mentioned identifying the right investment manager. I think if you start right, then chances of you ending right is very, very high. Very candid answer. Thank you. Last couple of questions. Which category of alternate assets, Samrudh asks, which category of alternate assets do you see becoming a large part of the Indian alternate asset market in the future? This is your futuristic head.
I don't know, मैं तो चश्मा पहनती हूँ, so I'm quite myopic. But if I try to remove my chashma, assuming I have a LASIK done, and I try to look at it, I clearly believe that in the listed space, unlisted space obviously is raking in the mullah, where there is access to capital available from the larger population. But I clearly believe that fixed income in the alternates space is likely to burgeon. That is because the biggest brahmastra that mutual funds had is no longer available, and that is the indexation brahmastra. अब वो ब्रह्मास्त्र निकल गया, सब शिवा है, सब पार्वती है, तो सब लड़ो एक साथ और बनाओ अपना space. So I think that is very, very important. So I see that category growing really big.
I think this is the first time we are seeing questions pouring in even towards the end of the show. So I thought these are the last couple of questions. So very quickly, I'll run through them. And in case you think you've already answered that question or you would not like to answer that question, just let me know. One interesting question, or one obvious question, Sandeep Dixit is asking, for someone at age 40, is it the time to include real estate as a considerable part of the portfolio?
So I was in Kuwait last month and somebody asked me a question on real estate. What is your view? So I said, if you are smart, you buy one house. Ghar ki baat ho rahi thi. If you're rich, you buy two houses. And then he was cheeky. He asked me, what about the third? Then I said, you're a fool. Only if you're a fool, you'll buy a third. So my view is very simple on real estate. Ghar jitna chahiye utna kharido. Investments ke liye, yes, look at REITs. It's a fantastic monetizable liquid category which is made available to you in the country. I know that when rising interest rates, our REITs tend to underperform, which we've already seen in the past. But you know, some of these IRRs are looking very attractive. So keep looking out for these opportunities. Real estate stocks have done phenomenally well, but there are pockets. For example, the affordable housing segment looks good. So look out for these window of opportunities, but don't be obsessed with real estate. As I said, it is India gate ko hila nahi sakte. So real estate is a very illiquid component if you try to hold it in the land or house format. And if you think that you are going to monetize it, then you should be reminded of the story of Radha the milkmaid. वो दूध लेके जा ही रही थी and she was building castles, that how she is going to sell this and, you know, make her castle, and पता चला उसका दूध का गड़ा ही टूट गया. So keep that in mind.
Interesting. The last question is from Jose in Capita. Do you see funds of HNIs increasingly moving abroad? He says a case in point is 35,000 crores was invested in Dubai real estate last year by Indians. I will just add to this, if you have any views for investments by NRIs or on LRS, if you could just share your insights.
The LRS as a route, to our view, will still remain prevalent, but the amounts are very, very small, you know, so it's that X amount per year per person, and therefore you can't keep adding family members just because you want to do more LRS. Global investing, you know, through the fund route, I think will now have very limited appeal because again, the, you know, the indexation benefit has gone, or, you know, it's now treated at the full, so you have to walk that extra mile to be able to generate. Having said that, if you ask me, some quality, you know, not quality, I would say some concepts, like for example, tech sector in India is largely services driven, whereas tech sector in say countries like the US is product driven. So if you like product innovation, if you like what, you know, Apple did to India, if you like what's happening in Tesla, SpaceX or whatever, recent SpaceX is a wrong example, but if you generally like all this, then you must own technology stories outside of India. But for that, these niche opportunities, or maybe buying houses, again, in the one category, not in the three category, barring these, I think India is a major growth market. So if you ask me one stock that you would like to go long, I would still maintain that stock is India.
Beautiful. I think that's pretty much what it is. And if it's okay with you, I found this question by Sudhakar Bantale very interesting about the fees versus the performance. I think that was a very candid question. Would it be okay with you to give him the special prize?
Oh, please, it's very difficult to call out that the emperor has no clothes. So yes, you have to clearly acknowledge the person who called it out. And it's a very raging debate. Every time you keep discussing this, यार मैं तो सबको बोलती हूँ, you know, 50 स्टूडेंट एक क्लास में है या 10 स्टूडेंट एक क्लास में है, टीचर ने सबसे फीस लिया, एक फेल हुआ एक पास हुआ, तो then does the failing student का parent go and say मुझे फीस लौटा दो? अरे come on यार, we have to understand that it is, and see, it is the onus of the teacher to ensure that she touches is each and every 50 students. That is the onus. So if somebody is deviating from that responsibility, obviously we need to be, figuring out ways and means how to punish the teacher or, penalize the teacher or reduce. All those things are par for the course. But to say that teacher mere fees lota do, and that is, I think that is something which is, not really. So I think the more people rise to the occasion and understand where it is coming from. Khushi khushi to teacher nahi bolti na ki mera student fail ho gaya. So I think there are certain, circumstances. So yes, you please, he or she is your student of the day, student of the year, jaise bolte hain.
Thank you so much, Lakshmi. I think this was truly one of the more enjoyable discussions we've had. Amazing insights. And I must tell you, across the chat box, apart from the questions, I think stuff like what you mentioned in terms of Papa is equivalent to crypto and all of that, people have just picked that up. People are raving about it. Thank you so much for your time.
Great.
Yeah.
Great. Thank you all.
Yeah. Akshar can't hear you.
Yeah. Of course, it was like very energized segment. Because whenever we're going to see the movie, we're going to refer to the words you have said. Whenever I'm going to see Bhool Bhulaiya, I'll remember your words. That's true. So, of course, Sudhakar has won the prize. So, I request Sudhakar to send his email ID to your info@pmsbusiness so that I can fetch his address as well. So, with that, we are coming to the end of the session. Thank you all. Thank you, ma'am, for this wonderful session. We have active participants. We have a lot more questions also, which have not been taken, but with constraint of time. So thank you, sir. Thank you, Mr. Vikaas, sir, and also Madanagopal, sir, for enlightening us with good things today. Thank you. A lot to take home.
Thank you so much.
Thank you, sir.
See you.
Thank you.
Have a great
Thank you.
weekend. See you. Bye.
Bye.
Thank you. Bye-bye.